Howdy, pilgrims. Welcome back to Venture Pill.
First up on this week's breakdown, we have Growl, a connected fitness startup focused on building the Peloton of Boxing, hot off a $4.75 million seed round.
Next, you'll hear about Liquid AI, the company building AI like tiny worm brains, having just announced $250 million in funding at a $2.3 billion valuation led by Advanced Micro Devices Incorporated. That's pretty crazy. And finally, stick with us for a breakdown on Public, which just announced a $135 million Series D led by Excel. The company empowers people to invest intelligently through what started as social stock trading and is now an AI-enabled investment platform for the masses.
Fitness, AI, and investing. Three of our favorite topics for this week's Dose partner. Let's get into it.
Let's do it, baby.
You see here, kid? You gotta just go for it. Don't think about what comes after or what came before. You just gotta bend your knees, take a deep breath, and jump.
This is Venture Pill, your weekly dose of startups and venture capital. We break down recent startups in the news and interview founders and investors to help you stay informed in the evolving world of venture. Yeah, baby.
Baby.
We're gonna get it, baby.
Who the baby?
All right, leading off this week's dose, we have Growl, which raised a $4.75 million seed round to build the Peloton of Boxing. Love when there's an easy, succinct analogy, easy to sink your teeth into here.
Yeah.
So Growl, a connected fitness startup, secured the seed round to develop its immersive, interactive boxing trainer. The round included participation from Skip Capital, Kima Ventures, Team Pact Ventures, as well as notable angels like former UFC heavyweight champion of the world, Cyril Gane. In short, the startup aims to redefine at-home boxing workouts by combining hardware, software, and AI-powered coaching into a seamless experience.
Yeah, this is pretty cool and only just founded in 2023, based out of our beloved Austin, Texas.
Oh yeah.
Oh yeah. Growl is focused on creating the next generation of at-home fitness equipment. And the flagship product is a wall-mounted interactive boxing trainer. So basically it combines the physical intensity of a heavy bag with the engagement of AI-powered virtual coaching. Unlike traditional fitness mirrors, which you may be familiar with, Growl projects life-size visuals of trainers onto its surface, allowing users to physically strike the system while receiving real-time feedback. The result is a dynamic, hands-on experience, often likened to the Peloton of Boxing. And it also reminds us of a similar company, which we know personally pretty well, Hydro, which is like a rower, kind of an immersive, interactive rowing experience. And I think this plays nicely into that world, but with a focus on boxing is pretty unique.
Yeah, agreed. This company's awesome, at least as someone like myself who has interest in novel workouts. I think boxing is definitely an interesting place for people to get their cardio in and be able to work out from the comfort of home, but doing something new, right? Everyone's familiar with Peloton or treadmill, of course, but this is just another element to the at-home gym. And so Growl's interactive boxing trainer integrates cutting-edge technologies to deliver an immersive and personalized workout experience. So some really impressive technology. We'll get into it here, starting with their life-sized interactive coach. Virtual trainers are projected onto the system, offering the guidance, motivation, and energy of a personal coach. Additionally, there's real-time AI feedback, which basically there's a multi-camera 3D motion tracking coupled with edge AI computing that analyzes your punches and movements, providing personalized insights to improve form and technique. Also, there's authentic resistance. So the wall-mounted trainer replicates the feel of a traditional heavy bag, delivering a full-body, high-intensity cardio and strength workout.
That's wild that they could even replicate how a heavy bag feels with like a piece of technology.
incredible.
And it's got to be sturdy, especially if I'm punching in there, you know.
Yeah.
That's pretty fun. I know we got into we had a heavy bag hanging up back in my garage
Mhm.
gym a few years back that we would always use. That was fun. It's a
That
good
was fun.
workout. So yeah, it's cool that they're taking this into an in-home, virtual experience, and they're gamifying it too. So actually they built this gamification using Unreal Engine, and they offer electrifying immersive experiences, allowing users to compete and progress through engaging content. So making it fun along the way, and it's family friendly. It's designed for ages 10 and up. They provide tailored workouts for all skill levels, bringing families together to train solo or side by side. That's pretty cool.
Yeah, really an awesome product just from a tech perspective. Like there's a 4K projector, which is where your coach comes from, the multi-camera 3D motion tracking, the AI, the authentic resistance, that heavy bag. That's awesome. And you referenced the punching bag we had back at your place in Austin. And I remember sometimes like you and I would take turns holding the bag or holding it for someone else, right? Now you have an AI coach who's telling you like, hey, hit the target better, like really giving you live active insights and just optimizing, improving your workout, which is awesome. Definitely like what I'm seeing here out of Growl. And so moving into the market opportunity and just sprinkling in a little bit more context, Growl is entering into the thriving $322 billion global fitness industry with a particular focus on the $110 billion US fitness market, though I imagine they'll look to expand if things take off. The US market, though, continues to grow at 7% annually, and specifically, rising demand for premium tech-enabled health solutions has fueled the connected fitness boom. And while companies like Peloton and Mirror dominate cycling and strength training, boxing is slowly emerging as a popular high-intensity alternative.
Yeah, so they're positioning themselves to fill this gap by offering that unique blend of physical engagement and digital innovation, a premium solution for fitness enthusiasts seeking that cardio and strength combo, and technique-focused workouts with that real-time coaching, and then that catering to all ages, fitness levels, and goals, from boxing and strength training to even offering yoga and flexibility exercises as well. They're really offering a full suite, a new spin on an old favorite, if you will.
Yeah, no, that's well said, and definitely recommend our listeners check out the website. You already know it's linked, but they have a video that just shows like how immersive and gamified it is or can be. It's also, calm, peaceful yoga and stretching, but if you're in the heat of a boxing workout, like they really make it intense, and it's really awesome. And looking into the traction, Growl has already began generating buzz in the fitness tech community as it prepares for market entry, so it's not available yet. The product is expected to launch in 2025, with pre-orders opening in April 2025. I think there's kind of a wait list type of thing going on right now. As for pricing, it starts at about $150 a month on a 48-month plan, or $190 a month for 36 months, which would be more of a premium offering or included in the subscription. There's also an option to just buy the machine and software outright. But I think the goal here is to basically replicate a gym that you would spend presumably $150 a month at. And then when you think about it, if you also look at it as like boxing classes or fitness classes, then it is a little bit more easier to justify paying for something like this.
Yeah, I mean that is not cheap. But you have to think, with the technology as good as they say it is and as it sounds, you're paying for, you're getting what you're paying for, hopefully.
Mm-hmm.
And yeah, when comparing it to that in person, it stacks up, but it is still very, very expensive. So we'll see how they do with that funding. They're planning to finalize the development of the product, enhance the AI coaching technology in preparation for launch, build the go-to-market strategy to drive awareness and adoption, and continue innovating the platform to set new standards for interactive connected fitness. And yeah, I mean, I imagine they're going to be hoping to build hype, connect with some influencers, and really hit that launch running hard, or I guess punch it hard, right?
Yeah, hit the ground punching.
Hit the ground punching. Hit the bag punching.
Yeah, no, I like that idea of, I imagine they thought of it too, but of just pairing with some boxing influencers or just pro boxers, right? Getting them and their community and their following onto the platform. Have some closing thoughts here, Sam, if you'll entertain me, which is just, as was mentioned at the top of this, it's like the Peloton for boxing. So just a quick note on Peloton. I feel like it's maybe gotten some not so great media press as of recent, right? Like the stock price kind of tanked. Um, as a quick side note, I have a Peloton at my house and absolutely love the device. I'm not sure if you're familiar with it, but for the sake of being able to get a great workout in at home in 20 minutes, there's no driving to the gym, there's no having to deal with people staring at you as you're sweating like a monster, or vice versa. I think it's an awesome platform that serves a very good kind of opportunity.
Mm-hmm.
And taking a step back, though, like with the negative Peloton recent news, specifically the stock price, while the stock price maybe didn't do too hot, this is obviously a venture investment. And this is just talking about their seed round. And if you look back at Peloton, like every investor who got involved in their seed round and probably their subsequent rounds up until they IPO'd still did incredibly well on that investment. And hopefully they were able to time their exit, when it coincided with Peloton being at all-time highs and the peak pandemic times. But, while people may be skeptical, from a venture capital perspective, like we've seen the proof in the pudding of Peloton being wildly successful for investors that got involved in the early stages.
Definitely. Yeah. I mean, it is all relative. And unfortunately, maybe some people rode the wave during the pandemic and saw that boom and bust. Those are the risks of public investing and any investing. But yeah, you're right. It feels like a really cool opportunity. And at the seed stage, a lot needs to go right. But the opportunity for growth, like following the Peloton playbook, certainly there.
Yeah, it's pretty cool to imagine a day where, people's basements, they have a Peloton, they have this Growl boxing thing and the mirror, and basically they have like a full function gym where they can cycle, they can box, they can do cardio, they can go on runs with a treadmill or something like that, all from home. It's pretty exciting to think about the future of fitness. I know you and I like to geek out about it a lot, both online and offline.
Yeah, no, it's pretty cool. And I think Austin will be a great place for them to grow this thing. We'll certainly be keeping tabs. So hope to try it out soon.
Yep.
All right, next up on this week's dose, we have Liquid AI, which is the company with AI built like tiny worm brains, which just announced $250 million in funding at a $2.3 billion valuation. Led by Advanced Micro Devices, the round also included participation from OSS Capital, Duke Capital Partners, and PAGS Group, plus some others. And this comes not too long after their $46 million of seed funding less than 2 years ago. So well capitalized early on.
Yeah, super impressive to raise that much in just 2 years. And so, yeah, getting into the company origins, founded in 2023, Liquid AI set out to build AI in a totally different way than other companies, basing their design on the brain of a worm rather than the brain of a human. Pretty interesting, but when you think about it, like by 2023, AI had already up and come, and at least the chat GPTs of the world had. So to take a novel approach, just to kind of separate from that pack a little bit is already interesting. And they're apparently able to design an AI that is more flexible by modeling it after the brain of a small nematode worm called Canorhabditis elegans.
Nice.
That's just 1 millimeter long, with far fewer neurons than the human brain, as you could imagine in a 1 millimeter long worm.
Yeah, that is crazy, but probably one of the hardest to pronounce words
in pill history.
Yeah, I mean, you made that look easy.
I appreciate it.
That was great. Yeah, pretty crazy here, and so you got to believe these were some smart people who figured this out, and they are MIT founders, building this, as many of the popular AI technology companies we have all come to know and love in the last couple of years, maybe coming up against a wall of advancing their models with massive costs of the data centers and diminishing returns for small improvements in the models. And so with models that are better suited to run on devices rather than relying on costly data centers, Liquid AI is positioning itself uniquely as opportunities like autonomous vehicles, as a quick example among many other use cases, are going to emerge in the coming years. So they're going to be well positioned to take on those challenges and opportunities compared to more traditional, what we'll call more traditional large language learning models.
Yeah, and if you take Venture Pill as a pulse on the future of venture capital and technology, which I know you and I like to, we've definitely been covering autonomous vehicles a lot recently, and in military use cases, as well as just, I think recently we covered Waymo, which was the autonomous taxis, but certainly a rising trend where you could see where liquid AI could come into play. And if you really feel inclined to dive into the weeds, we recommend taking a look at their website in the show notes to learn more about what they are deeming LFMs, or also known as liquid foundation models, and how they compare to the industry's leading models. It's actually quite impressive and interesting. And so Liquid AI said it's working with businesses to use its technology in industries like consumer electronics and financial services. That said, the startup declined to name any current or prospective clients, still staying, relatively stealthy. And they have trained their models to optimize for specific applications at this time, like genetic data analysis, fraud detection, and self-driving.
Yeah, and those are all huge, huge opportunities, which we've touched on. Self-driving, obviously, like you just said, very top of mind as we're starting to see those things on the road. And we don't dive in to the weeds too far, as this is just so above our heads with this technology. It's truly amazing that someone could even conceive of this idea to base an AI model off of a microscopic worm brain instead of I mean, that is insane.
Right.
So just kudos to the folks who came up with this, who researched it, found that this could be a really big opportunity, and then went out and made a company around it, raising millions, hundreds of millions of dollars within the first couple of years. That is truly incredible, and it just goes to show how venture capital can really power innovation that may have otherwise remained in a lab or in a research report somewhere. And to get capital behind it and get people kind of aligned with those incentives, some investors involved to solve big challenges. That's what we're talking about, baby. That's awesome.
That is exactly what we're talking about. That felt like you were reading off a teleprompter from inside my brain. You everything I was thinking about saying, you went on to say. So no notes, well said, partner. Super excited about Liquid AI. Love the novel approach, the creative thinking. That's the juice of venture capital that you and I love. So let's move on before I pile it on here.
Fresh squeezed. All right. Rounding out this week's dose, we're going to talk about Public, which just announced their $135 million Series D led by Excel. And $30 million of that was in the form of debt, as a note. And Excel has led or co-led every single funding round of Public since launching in 2019. And that was almost exactly 5 years ago. So they are celebrating 5 years in business. And Public is really on a mission to not merely democratize access, and no shame or no problem with folks democratizing access. We love that.
We love that.
But they're not looking to merely democratize access to public market investing, but to additionally empower any and everyone to intelligently participate in the greatest wealth creation machine out there, and that is the U.S. public stock market.
Hell yeah, baby.
Yeah, I mean, you love it there. So they're not, I mean, anybody can help someone get access, but they're really trying to do is teach people, empower them with the right tools to actually be successful in the investing, as opposed to other companies which may promote uneducated trading or more risky investing than what is advised.
Yeah, no, I must say we're filming this in late December, and the U.S. public markets certainly feel like an incredibly great wealth creation machine, especially as of late. So, riding some recent tides. And also just a comment on the fact that Excel has been involved in every round, not only been involved, but led or co-led every round for almost 5 years. That is strong conviction, right? Like typically, if you're looking to maybe participate in a investment round for a startup, it's rare to see that the lead investor sticks around for that long. I mean, when you do see that, that makes it abundantly clear that they believe in something or a lot of things. But to do it for 5 years, that's awesome. Excel clearly loves what they're seeing out of public, and so do you and I. So let's get a little more into it. Since their last funding round, the platform and company have matured significantly. And we're taking some of these numbers directly from the founder's blog post. You already know where it is. So it started out as a social stock trading app in 2019, has now become a powerful investing platform offering 5 different asset classes, as well as deep research tools and sophisticated portfolio management. They found over time that AI is, at least now, better at providing many of the benefits that their social features used to provide. So, for instance, their embedded AI research agent named Alpha is used by 90+% of members who now receive real-time context about what is happening in the markets, and 25% of Alpha conversations translate into a trade within 3 hours. So that is, a really powerful tool if Alpha is converting 25% of conversations into a trade on the platform. That's awesome.
Yeah, and they've got billions in deposits every year. Most customers are consolidating their investments with Public, making it their primary portfolio. And their core brokerage business is profitable today with over 10 significant revenue streams. So they continue to expand the platform with more asset classes, account types, and AI-powered features that help investors build their portfolios and understand the markets better. And it sounds like a really great tool. I don't think either of us have tried it before, but it sounds great, like a way to really get the most up-to-date data and analysis seamlessly through AI. That's going to make it very sticky for those customers, and you'll get into a little bit more of the numbers here soon as well.
Yeah, exactly. It feels like a perfect marriage of a great platform or tool, as well as a great opportunity, which is part of the puzzle that Public is looking to capitalize on here. And so diving into that a little bit more, studies show that by 2045, $70 trillion of assets will be inherited by digital natives, with 28 trillion of that in the form of stocks and bonds. That, combined with this generation's income growth, will make it the richest in history. Woohoo, digital natives. We're rich, baby.
Hey, I think we're part of that.
I think we just squeezed into it. This generation, the digital natives, is also self-directed first, meaning that they are the most autonomous when it comes to investing. And the generation started building financial literacy earlier than prior generations, giving them the confidence to control their portfolios and devise their own investment strategies. And those last 2 points feel like a perfect summation of the current state of young investors, right? Like maybe it's because of the meme stocks, right? The GameStops and the AMCs of the world and the Reddit pages that people are looking at. But it really does feel like the average age of an investor is getting younger and younger. Obviously not promoting to blindly follow the meme stocks or anything like that. But, in terms of building financial literacy, maybe you make some money in GameStop and all of a sudden you're like, oh, wait a minute, there's actually money to be made here. And now you start thinking about how you can build a more balanced and protected portfolio. And that's, compounds into pretty strong financial literacy at a young age, which is exactly the part of the opportunity that Public is working on here.
Right. And I think Public steps in and really looks to shepherd these people in the right direction with more of a trusted resource and all in one place, as opposed to, what anyone could find on the internet, which is great in one sense, that anybody could learn about basically anything really quickly now, and accelerating with the use of AI and the growth of AI, being able to learn something and develop a portfolio. That's one of the best use cases for anyone out there who's looking to grow their wealth. But it has to be guided, and it has to be, based in a trusted strategy, and not just throwing money around. And so that's really where the opportunity meets their solution. And they found that it's growing quickly, and it's really catching on because they've been able to double their assets under management in less than a year. And that amount of time to double AUM continues to shrink. That's driven by extremely low customer churn. So people are increasing their share of their wallet, both new and existing customers, and making public their primary portfolio. And they're sticking around.
Mm-hmm.
Once they're there, they're really sticking around. And that's a key component of a powerful business. And as they expand products and asset classes on the platform, their gross profit per user is continuously growing as well. This has happened every single quarter for the past 3 years. So that right there is probably a key indicator as to why Excel has continued to come back for more.
Mm-hmm.
Very impressive metrics, and obviously a great partnership that Excel has going with Public and the leaders at the helm there. So a great one to round out this week's dose, and I know you and I would be curious to see what this is all about.
Yeah, no, certainly. And it reminds me of Alinea, who we interviewed, one of the founders, Eve Halimi, way back when. But similar, I think Alinea was more specifically targeted towards Gen Z and women, but similar platform of like breaking down the barriers to investing, making it easy, teaching you how to do it, making these different portfolios that you can follow along with and invest into, building out financial literacy. So I'm sure Alinea and Public are aware of each other, because from what I've seen on LinkedIn and just loosely following along with Eve, seems like Alinea is doing incredibly well as well. Quick, like one thing I'm a little bit curious about, like in reference to doubling AUM, I wonder how much of that is a result of like getting new capital into the platform versus just the stock market doing so well and having putting smart money into Nvidia and Apple and Google and like these companies that have been going, Tesla, like these companies that have just been driving returns across the whole market. I mean, and either way, AUM is AUM, so I'm not knocking them here, but just like merits consideration of, I'm sure it's a balance of both. I'm
sure it is. Yeah, it didn't occur to me when I initially read that number. I'm sure it comes into play, or I don't know if that number is independent of how the market performs, but I imagine it's inclusive. So yeah, it's definitely I mean, they're riding the waves of that too. But with that, comes the opposite potentially. We'll see what their growth would be in a downturn, right? So yeah, it's all sunshine and daisies right now in the public markets mostly. So we'll see. And mostly for the I mean, they've been ups and downs since 2019, that's for sure. But, over the long term, if they're teaching the right sort of strategies with the long-term mindset, they should be able to withstand that. Yeah. No, I mean, loving what they're doing here at Public, again, as does Excel, and just the fact that they're onto their Series D round, I believe it was. So they're doing well. We love to see it. We'll be keeping tabs on them. And I think that wraps up this week's dose. So we had fitness, we had AI, and we had investing. To be honest, I think they might all be disguised as all three of them are really AI companies, or at least leverage that technology to a relatively significant extent. But that's, partially a comment on the state of the game right now. And either way, it was a fascinating dose. Love breaking these down with you, partner. Hope the pilgrims out there did as well. Yep. No, that's a good summation there, partner. Reminds me of what Sergey Gribov said about his outlook on AI companies. And, every company should have a component of it. It's more like, how are they using it? It's always cool to be able to apply what we've learned in those interviews and compare it to what we're seeing in some of the companies we choose to cover. So totally. If you haven't listened to that one, that was a good interview a few episodes back. And we'll catch you guys next time. This one should be coming out towards the end of the year. So we hope everybody has a great holiday season, and here's to another year of Venture Pill. We appreciate you listening. Amen to that. Happy holidays, pilgrims. Thanks for listening. Join us next week for another dose of startups and venture capital. And as always, we appreciate our pilgrims spreading the word about the show. Share with your friends and help someone else make the pilgrimage. See you next time. She told me that she only bumps my music when she's lonely. Thinks my vibe's a little low-key, okie dokie, that's alright, but wait,
I don't know how to do things different.